Duolingo came up on a live stream this past week, and I looked at the stock and really liked their growth rate. I really liked their profitability, and I liked how the markets really sold off the stock and created a very good discount opportunity. I'm going to go through in this video and just kind of point out the things that I'm seeing in Duolingo and what the idea of a potential investment might look like. So overall, Duolingo is a $12.43 billion market cap, revenue 885 million. So investors are paying upwards of 12 to 14 times revenue. PE is really high, and they are growing really fast. Analysts think it's discounted quite a bit since the stock had a high back in May, and it's been selling off since then. I think a big part of the sell off is that investors fear that AI is going to eliminate the need for this learning application to exist. And Duolingo is a learning application. It's a software that people learn different languages. They learn other topics as well. And it's been really successful. People enjoy using Duolingo. That's what their business is about. When I look at their revenue, there's no sign that AI is interrupting, disturbing, affecting their business. They're actually accelerating their growth. 41% looks really good in the last quarter. Overall, 39.5% growth in the trailing 12 months. And they are really profitable and they generate free cash flow, just positive all the way around. And you see how they've grown their cash flow. Looks really good. Gross margins are 72%. That looks really good. So overall, I really like how they look. And there's a ratio as well with software companies. You want to have, if you add profit margin, 13, plus the growth rate of the company, it should be above 40. The growth rate is 39. So 13 plus 39 is 52. That's well over that 40 as a metric. And this would be a very good idea from a software stock investment perspective, that ratio. The balance sheet's excellent. They have a lot of cash, almost no debt. When we look at the forecast that analysts are putting together, 16 analysts cover the stock, and all analysts think it should be priced higher, by the way, all 16. And when we look at the growth rate, right now, they're going to grow this year. They're actually growing faster than this consensus growth. Next year, they're going to keep growing. They're going to get pretty big, almost $2 billion over the next 3 years. So that looks really good. And their profits are really going to expand. So I'm going to use this data in my valuation. When I look at Duolingo, I look at a stock that is discounted by 33%. And primarily due to the cash flows they're generating. They have really good cash flows. They're growing. They have very good margins. So the cash flow is just going to really expand. It creates a big value, net present value of cash flow in the current year. I add cash, take away debt, and I get to an equity value of $22.8 billion, well over their current stock price. Earnings per share doesn't quite get me to their stock price. I'm using a PE at 36. I'm not going to go crazy and go higher, although I could, but I'd rather just go with 36. So at a 33% discount, this is compelling. And it compelled me to start buying shares. And I'm a shareholder of Duolingo now. And this is my research behind it. It'll be interesting to see if AI does in fact hurt Duolingo or if it actually helps Duolingo. If they use AI and actually make their platform even more attractive to their customers. We'll see how that plays out. So that's my analysis on Duolingo. Hopefully you found it interesting.